Good evening. This is Joe, and this is the market update and outlook for tomorrow. This is Wednesday, August 28th. First, we're going to take a look at a snapshot here of the Dow, which is the DIA, the Diamond, the SPY, and the QQQs for the Nasdaq. And you can see the Dow, the SPY, and the QQQs. As I mentioned this morning in the write-up that I posted, the diamonds really, the Dow's leading the market down. It's been the weakest one of the indices, and the SPY is right behind it. And now we've got the Nasdaq rolling over also. And I think the interesting thing that I'm seeing on the Nasdaq is you actually could see a small head and shoulders that looks like it's formed. We've got a neckline here. It'll be interesting to see if it plays out. If it does, we're talking about a movement that's between this distance of the head that projects down to about 73 on the QQQs. Now we've got a gap in here that is begging to get filled also. I don't really see the next support on the SPY is down around 160. You can see last week's support was broken. Last week's support was broken on all three of the indices. There's nothing bullish that's showing up here that I can see. There's when I look at the demand index, the red is the selling pressure, the blue is the buying pressure. I'm not even seeing any divergence there. And you can clearly see, I pointed this out in one of my charts the other day, that on the buying side with the Nasdaq, you were getting a divergence where the price went to a higher high, but the buying pressure did not, implying that the Nasdaq was getting ready to roll over. So that's kind of a quick perspective. No real, there's no position as far as I can tell here to take. It's clearly already in a downtrend. I wouldn't be jumping in to sell this because I'm really not sure, where it's going. I don't see a setup, and it's definitely not something to buy at this point. Let's take a quick look at gold. Blow this up a little bit. Okay, this is GLD, which is the ETF for gold. And you can see that it has run into this resistance level that I had posted on the chart days ago. We've got another resistance level above it. I'm not seeing any bearish divergence on this where, typically I see that in some of the various indicators. And I'm not really seeing that. But on the other hand, when I see trading activity that looks like these small little doji stars here at a resistance point, if you've been in this ride, it's probably a good place to take some profits. I wouldn't be jumping in right now. I'd be waiting. If I wasn't long, if I wasn't in here, I'd be waiting for a pullback to see if I could find a good setup to jump in on. We've got a lot of congestion in here that this would have to get through. As we can see, this point here and this point here. Clearly, now this is the 200-day moving average. This is the 50-day moving average. You've got the 20 and you've got the 10 exponential. All the rest of them are simple. I use the 10 exponential as kind of a trigger. I like to be on the right side of the 10 exponential moving average to help guide me as to where I ought to be. And you can see that these have spread out. They're starting to turn, but the 50 is still below the 200-day moving average, which implies that we're in a, basically a bear market. We haven't gotten out of it. Let's take a look at oil real quick. Look at the US oil, which is the oil ETF. I had also shown on a previous chart when I looked at oil that we had a trading range that this has been in since basically mid-July after a pretty nice up move here. Again, you see the 200, the 50, the 20, and then the 10 exponential moving average. It's been going sideways, going back and forth. So now we've popped out of this. This was yesterday, this was today. Tremendous volume. You see the buying that's occurring here, okay? What I think is going to happen here is that we're going to pop the distance of this range. We're going to pop all the way up into here, which is really, I don't know. It looks like you'd have to look at a measuring, but it's probably up 41, 42. in terms of the move on the on USO. Where we go from there, we'd really have to look, back and see, what kind of prior resistance are we getting up in here. It's kind of hard to see that unless you shrink it down. And then all of a sudden you can see where another resistance point may be coming in close to 40.5, and other, the peak back in February, March of last year was up around 42.5. So kind of equates to the distance of the move right up into some of this resistance. So that's about it for the snapshot on the markets tonight. Tomorrow we've got the economic indicators. And basically we've got two of them. We've got GDP at 7:30 Central Time, and we have jobless claims out at 7:30 in the morning Central Time. So anyway, good trading, and hope you have a great day.